Going to be looking at the execution of one of our elite traders over an ECB sources comment which occurred on October the 4th at around 6 minutes past 2 in the afternoon. So just going to cover the actual sources comment itself. It's quite an interesting one as it relates to the reinvestments within their QE, and as such has an effect on the curve and the actual the short end and the long end of the curve as well. So we're going to talk a bit about this going forward, but just looking at first at the actual headline that came through. Sorry, it's not very large, but ECB post-summer 19 guidance to be very accommodative, emerging market volatility among growing risks, and ECB twist would boost purchases of longer term bonds. Now, this is something that the ECB has voiced previously. Essentially, Operation Twist is going to be the reinvestment of bonds more into the longer end as opposed to the shorter end. So essentially, when they've spoken about this before, we had a sources comment about 3 months ago, 3 or 4 months ago, and the market did react, but nothing's been locked in place, and we've kind of been waiting for some more confirmation on this during the ECB presses, etc. And this is the kind of first instance for a while that it's been re-brought up. So where ECB's reinvestment policy essentially says as bonds from a given country mature, they can be replaced with new bonds of any maturity. So they can decide what dated bonds they want to buy, whether they want to buy 2-year, 5-year, 10-year, 30-year. Now there was also a final part of the sources comment, which was ECB likely to continue to use old capital key. So this relates to the capital key being, it determines how much capital each country contributes to the ECB, but is also used in the calculation for the weighting of reinvestments of their maturing bonds. So we've got two kind of layers here. We've got whether they're looking at reinvesting in the shorter or longer end, and also a potential question as to which countries or the weighting towards each country that they may be looking to tweak with the reinvestments as well. So with regards to the boosting purchases of longer term bonds, what that's essentially saying, if I can get here, so assuming this is the curve, we have your 2-year, 5-year, 10-year, 30-year. It's essentially saying that it's going to buy more of the longer dated bonds, which with this being the yield would push the long end down, and in turn the expectation is that they're going to send shorter dated bonds. So that's going to push up the front end of the curve, and in turn this is where we expect to see a flattening of the yield curve, as this would in turn, this is very exaggerated, move to a flatter yield curve. So that's what we're looking at, but we're going to be looking at this on the ladders, which is of course an inverse of what we'd see on the yield curve. Going back to the prior time they mentioned this, you know, the trader reminded me of what we saw in the ladders when this happened. It took quite a while for this trade to develop in the first instance a few months ago, and what we saw was the long end going bid and in turn dragging up the short end, and then as the long end started to come off, the short end eventually dumped and really sold off quite heavily. So the initial move was all of the bonds shifting up, and then really the second phase was the short end really selling off quite aggressively. So as this comment came out, the trader recollected the last instance of this happening, and really used this to kind of allow himself to give the trade a little bit more time to develop, because where you have these slightly more complex comments where the market needs to kind of digest and understand and decide what it's going to do, especially when overlaid with, you've got the capital key in there as well. There can often be a bit of a choppy kind of first phase before, you know, the market really finds and determines what direction it wants to push into. So just switching quickly to the charts. What we have here is the chart of the Buxl, which, as you can see, 1206 had a really aggressive move up. Now we're not actually, unfortunately, going to be able to see the ladders for the Buxl because this trader doesn't have that recorded or set on his recorded screen. It's not a market that he's particularly active in. But what you can do, you can just see here how far it went and how far the pullback was. And you'll be able to see the orders going through, which I will point out to you as they do. But really, when you're looking at this move, you can consider what's happening in the ladder. In the Bund, it didn't go quite as far, and it probably did come back a little bit more, but for ease of demonstrating this trade and the differential between what's happening in the short end and the long end, I'm going to be referring to the Bund because it is on our screen. But the majority of the profits from this trader was actually made in the Buxl, which is the 30-year German government bond. So here we can see, so this is the Schatz, the German 2-year, and you can see as the comment came out, it ended up offering, this is from 206, around 1, 2, 3, 4, 5, 6, 7 or 8 ticks, which in a 2-year bond, which doesn't really move very much, to happen in the space of maybe 5–10 minutes, you know, it's quite a significant move, but it at least demonstrates that what we're seeing is a downward move in the shorter dated bonds, and as we saw in the Buxl before, a move higher in the longer dated bonds. We're also going to see the trader execute in the 5-year as well, which is the Bobl, which was a slightly tougher trade to execute in because, again, relaying back to what happened last time, the 5-year was a really good sell in that second phase, but the problem is, which you're going to see on the ladder, dealing with the 5-year being kind of pushed up with the longer end in that initial phase, and where you choose to start shorting it, you know, you're going to have to take some risk on because, you know, there is the potential for this to really roll over and have a significant move. I can't remember exactly how far it went last time, but it was certainly where the vast majority of the opportunity lied within the overall trade itself. So I know that's quite a bit to take in, and hopefully it should make a bit more sense when we're looking at the ladders. Another thing to mention was this was an M&I source as well. So we have various Reuters, Bloomberg, M&I sources coming out. But M&I invariably, it's not necessarily trusted as much by the market and can take a little bit longer for the trades to develop. So just another thing that's going through the trader's mind as he's executing on this trade. Okay, so just throwing quickly to the ladders, we've got the Bunds, the Bobl, which is the 5-year, and as I said, what we've not got on here is the Buxl, but I will be able to show you that in this box as and when the trader does execute, and you can see that relative to the Bunds. So just wait a few seconds and we should see the initial reaction, which is actually quite difficult to trade in the Bunds. I myself got caught out on this because although there is an initial move upwards, there's quite a steep pullback of around 9 ticks or so. Okay, so the comments come out and around 1920s, is the prices that, or the start of the move in the Bund, and around 57s in the Bobl. So you can see instantly the market's gone bid, and now it's just a case for this trader to know that this trade could potentially take a little bit longer to play out. So you might have to have a couple of bites on the cherry to really attach yourself to that first move. So he's not executed in the Buxls yet, but it's 160 lots long in the Bunds, which is just pretty much scratched as it's pulled back. Having another try, 160 lots long in the Bunds again. But still, it hasn't instantly gone bid. And this is the hard part. The real tough part is where there's this squeeze all the way back to 16s before the market really starts to firm up, or the bid starts to firm up and starts to project higher. Okay. So I'm just going to stop here. So you see Bund started to gain a little bit of traction, which demonstrates that the idea is playing out. You know, we are seeing the long end being lifted. We're not seeing an offer in the 5-year as of yet. It's actually being dragged up with the Bunds. But if we refer back to the, or you can think back to the chart of the Buxl, the 30-year, which I showed you before, that's the one with really quite aggressive move. And he actually buys 50 lots. You can see in here where he's executing in the Buxl. And as of now, he's 40 lots long, but I think he gets another 10 lots on in a minute. So you'll see the vast majority of the P&L will actually be derived from the Buxl. So as the long end's pushing up, he's already understood that the short end, the 5-year, should start coming off, and he's got short, but just watch how long it takes for this 5-year trade to develop. The Bund being a little bit sticky, but eventually the long end should really push through and go quite big, but he will see his 5-year position go offside as it's still dragged up. So adding more into the highs of the Bunds as we take the high of the day, as we'll also have the Buxl pushing higher quite aggressively here as well. But when Bunds do finally go, you know, bearing in mind we started in this 20s region, you know, it is a good 20-tick move, and I think we trade up to potentially around 45s, 48s. But still, this Bobl position, although it's not getting dragged massively high, it's not taken the high of the day yet, it's still not on side. So as the trader, as he's executing, he's looking to get more aggressive, shorting the Bobl as the Bunds finds a high, or the long end finds a high and starts to come off. So you can see here he's net long 76 lots, so he's covered his Buxl position by now. You can see the sell orders coming through, but again, you can attribute a large proportion of the P&L to that Buxl position. But now it's just worth paying attention to how he manages the 5-year position, because that's the interesting part of this trade, where we're considering, you know, the opposing directional moves of each of these. And actually, as the Bunds start to come off, you know, it didn't actually work out as well as expected relative to the last time this trade occurred. but you can see how hard it is to hold this short as we have another test towards the highs in the Bobl, but really not able to push through that 63s level at the highs. So the long end's starting to pull back, the Bobl's getting pulled down with it, the 5-year, and as such it's getting more aggressive in the Bobl now, up to 150 lots. So again, after loading up in the Bobl, we actually see just another final push higher, which, you know, made this trade quite difficult to execute in the shorter end. So as usual with this trader's execution style, you know, he's always trying to scale out of some, laying some cover orders on the bid in this case, as he's going offside, similarly to as he's going further onside, looking to cover as the market rotates slower. I think just something to stress here is, you know, how much the trader sticks with this. He knows he's seen this pattern before. He remembers that it was difficult to trade on the last time and that it took quite a while for the short end to wake up, but he's still trusting the trade and trying to stay with it. You can see adding a little bit more, just trying to keep his Bobl position up to a size that he's happy with. And as soon as he's going on side and he starts to see his plan play out, getting more aggressive, selling more, laying orders on the offer as well. And what we'll see now, as the initial move starts to be reversed in the Bunds and the Buxl, the 5 years also dragged down, not to a significant extent, but still giving a good opportunity, or the right trade to take to fade the move, if that makes sense. You want to trade with the long end on the initial part of the move, as that's the side that should go up, and then sell the short end on the retracement or the pullback, as really that's the side that should sell off based on the actual comment that we saw. So I'm just going to speed this up a little bit now. So this is at double speed, and you can see as the Bobl, you know, starts to gain a bit of momentum with the rest of them. He's adding in, maintaining a pretty large position, around 300 lots, and then scaling out on each sweep as it rotates slower. So still managing his Bobl position. I think eventually it does rotate down past the 47s and does, you know, get a pretty good contribution from that Bobl trade as well. But I'm not going to watch it all play out, because I think even at double speed it can take a little bit longer to develop. So I'm just going to hold there and really just cover the main points from this. In all, based on the comment that occurred, the curve did do the right thing. It did flatten. The short end did sell off, as we saw on the chart in the 2-year. At the long end, the 30-year had the most aggressive bid, and really it was weathering the initial chop, which, you know, allowed you to stay in this trade and really reap the opportunity from it. You know, if you were trading the Bunds, you could see that you weren't going to go on side quickly and have this trade run away from you. You were going to have to bear with it for a little while. So really just demonstrating that where you understand what should happen, you know, it might take a little bit of time for the market to really interpret it and everyone get on the right page. So it doesn't necessarily mean you're wrong if you go offside immediately, but as your idea starts to gain traction, as what you're seeing on the ladders stacks up and really supports your theory, you know, that's when the time is to start getting more aggressive.